Zuber, one rental at a time. It is your daily financial news. Look at that little S. There it is, the daily financial news. If you like to get your news in 12 to 15-minute chunks, 7 days a week, this is the channel for you. If you want to say hi to me, hi to my puppies, go ahead and leave a comment below. I will do my best to get back to everyone sometime today. I want to thank all of you returning viewers. You are making a difference. The channel is growing. If you are a new viewer, welcome. We just try to bring in the news. We try to make some money. We try to make some good decisions because that's what life's all about. And of course, we want to have some fun while we are doing it. A couple of quick notes for those of you that sent concerns for my puppies yesterday. As I shared, they were not feeling very well. I want to thank you. That was very, very nice of you. They feel much better today. I didn't share it yesterday, but they got their final puppy vaccines the day before, and it was one of those reactions that they warned us about. But they were all on the mend. They are happy. They are running around like crazy after about 24 hours of just not feeling good. So thank you. That was so nice of all of you to send those thoughts. And then Jason, congratulations for getting your deal. Your card will go out in the mail. I didn't make it to my office yesterday, so I didn't get you the shout out you deserved. But Jason, here is your card. It is going out in the mail. So a couple of things caught my attention on the daily financial news. A couple of things. First off, the 10-year note continues to run. I checked it yesterday, and it was at 2.88. Got to talk to Matt, the mortgage guy, this week. Obviously, rates are going up. Dug into JPMorgan's report a little bit more. As you know, JPMorgan is, if you had to follow one bank to get a feel for real estate, JPMorgan is the bank. JPMorgan, if you don't recall, has it been 2 years? Might have been 18 months ago. I brought you the fact that JPMorgan was essentially stopping loans in the real estate game, right? Real banks like JPMorgan never officially say no, but they make the requirements so strong that you go elsewhere. So JPMorgan is one of those institutions I dig into a little bit for you and for me. And this is what I saw in their latest earnings announcement that was not reported in the media near as I could tell. One, the consumer is retreating because of higher rates. Shocking, I know, but the fact that you can already see it is interesting. And I told you this would be interesting several weeks ago. One, auto loans, flat. We kind of heard that from CarMax, right? CarMax used cars kind of makes sense with new cars. Credit cards, down 1%. Interesting. Not what we heard from the entire credit card industry, right? Didn't we just hear it was up 8 or 9% a few weeks ago? JPMorgan down 1%. Mortgages down 5%. Folks, we are going to have demand destruction. We are going to have supply destruction. As I've said before, and likely will say again, the Fed broke housing, and it's up to us to kind of pick up the pieces. And then finally, business loans. Business loans were actually down 7%. Now, as I dug into this and I saw these numbers and they were very different than I expected, it really went back to the fact that JPMorgan runs a tight ship. JPMorgan is not above tightening credit conditions early. And I think that is what's happening. So what we will see is JPMorgan will reduce its loan book ahead of a recession. This is why Jamie Dimon kicks ass, because he is willing to move early. So again, I think JPMorgan is leading the race where we will see Wells Fargo and Citigroup and B of A fall behind and then ultimately have to probably take bigger reserves for bad debt. It's going to be interesting to look at. More interesting on the mortgage demand. Mortgage demand, again, has been reported down as 40%. compared to April of 2021. No listings, no buyers. It's just going to be a messy market with transactions falling. The last thing I am left with, thinking about the consumer, because if you were to ask me what's the one thing I'm digging into every day, it's the consumer, the consumer, the consumer. They're my tenant. They are my competitor. They are my sellers. So if I can figure out when they're greedy or scared, I can strike and be prepared. So consumers, after reading JPMorgan's report, there are two options, and I want to hear from you. Folks, audience participation time. Get those comments ready. Let's get the algorithm going. One, higher rates are truly slowing down consumers. Possible. Two, consumers are preparing for something bad. Interesting. I guess in fairness, it could be a combination of both of those. I think it is very interesting because I think we're seeing a clear delineation. We have reported, and I have talked about for the last month, the rich or well-to-do are retreating from buying, right? When the folks have the largest discretionary income, aren't doing vacations, aren't buying cars, that's a problem. Are they preparing for something coming? And if they're preparing, what does that mean for the rest of us? Are we just running blindly into the night, spending and spending and spending? Probably, unfortunately. Why would today be any different? So again, let me know what you think. Are rates denting consumer demand, basically for credit? Two, do you think consumers for once in their life are thinking ahead and squirreling away dollars for a recession? Or three, do you think both things are happening? Let me know below. I would love to hear from you. Wow, Jack Dorsey. Jack Dorsey, in my opinion, is the linchpin for Twitter. Yesterday, Jack Dorsey ripped the board at Twitter. I think there was a quote inside his Twitter stream of consciousness talking about good boards don't make good companies, but bad boards kill businesses. Jack Dorsey is leaving the board at Twitter this year, 2022. He is the largest shareholder on the board at roughly 2%. Jack Dorsey didn't say it, but I think basically said, sell to Elon Musk. That's what I took from it. Let me know if you disagree. But I think the chances that Elon Musk owns Twitter in 90 days went up because Jack Dorsey gutted the board. Now, the board, again, remember, the board has a fiduciary duty. And if they don't take this bid seriously, they can be held personally liable. Based on Jack Dorsey's tweet or tweets, I think Elon Musk actually might own Twitter. That ought to be fun. Let's see what happens there. What else do we got? I got so much stuff here. Sometimes I can't even read my own. Oh, China. China brought out their GDP for the quarter. It was mixed bag. Basically, Q1 in China really wasn't that bad. 4.8% growth on a 4.4 expectation. However, March was terrible and worse than expected. Retail consumption in March was down a negative 3.5% on an expectation of being down 1.6. All I have to do is ask is, what the heck are you talking about? You're basically telling everybody to stay home. Why do you think? What are you thinking? Of course it's going to be negative. Crazy. Let's see some important earnings this week. We got to pay attention to IBM, Procter & Gamble, J&J, Verizon. These are all Dow stocks and will move the market. Netflix, Tesla, and Snap for tech. All three of those, Netflix, Tesla, and Snap, very interesting. It'll be very interesting to see. Then we've got United Airlines, American Airlines. I'm interested in summer travel, cost of fuel. And then American Express. American Express, for me, it is my peak into small business. I want to know how small business is doing. That's going to be interesting. I suspect that when we exit this earnings season in 3 weeks, the expected earnings per share in the S&P 500 will come down. I expect the multiple to contract. Generally speaking, that is not good for prices or the index value, but we shall see. I got an interesting view because we are heading into the summer. The top 5 destinations based on TikTok. I thought that was an interesting article. Number 5, Sedona, Arizona. If you haven't been to Sedona, I don't know. It is beautiful, but you got to like that kind of beautiful, right? It's kind of different shades of brown and red. Texas Hill Country in Texas. I honestly could say I've never heard of that. Georgia, McCann, Georgia. These are all 5 U.S.-based TikTok destinations. Number 2, Jackson Hole, Wyoming. And then finally, Oregon Coast. I can say I've actually never been to the Oregon Coast. I should check it out. If you've been to the Oregon Coast, let me know a spot. I'd love to know where I should go. I might take a driving trip. The economic calendar is something we haven't talked about this week. Number 1, National Association of Home Builders came out this morning, and home builders are shockingly not as excited. Oh my goodness. Can you think about it? National Association of Home Builders, they suddenly think rates are too high and home builders and traffic are down. Crazy. Tomorrow, housing starts. That ought to be interesting. See if housing starts tie in with home builder sentiment. Number 4, Wednesday, mortgage apps and existing home sales. Existing home sales last month had an annual rate of 6.02 million. They are now expected to be 5.78 million. Yes, folks, the housing slowdown is real. I've been talking about transactions crashing 25% this year and 50% year-round, 50% peak to trough. Man, I need to drink some coffee. My brain is not keeping up, or my mouth is not keeping up with my brain. Oh, terrible. And then Thursday, we have the unemployment rate. Chinese housing sales crash. If you followed my channel 3-4 months ago, we were talking about Evergrande. I brought it to you first. I brought it to you why it was going to be impactful because the Chinese consumer was not going to buy. We talked about how Starbucks was the canary in the coal mine, followed up by Nike. And of course, home buyers are negative on buying homes in China. Shocking. It fell 29%. And I would argue going to continue to fall. Chinese home sales plunged 29%, much weaker than expected. Jobless climbed in China. Again, shocking. You tell people to stay home, jobless rate goes up, and spending continues to drop. Folks, I have been lucky enough in my career to travel the world. People, the family unit is essentially the same everywhere, essentially. We all want better for our kids, and we all get nervous, scared, or excited. If we're excited, we spend. If we're nervous, we retreat. And then lastly, mortgage demand is down 17%. So home sales down 29%, then new mortgage demand down 17%, which means the housing crash continues in China. What do we got? Last thing, we're talking about Bank of America's earnings came out. They basically met top line, which again is revenue or kind of sales, the top line number. They beat the bottom line, although as I shared with you a year ago, banks are using these credit reserves that they put on the books to manage future quarters. Guess what? Bank of America did it this quarter. Bank of America reversed $362 million in loan loss reserves. That is important because what did Goldman Sachs do last week? They increased their reserves by $902 million. So Goldman increased their reserves. Bank of America released their reserves. I'm betting on Goldman. I think Bank of America is managing their numbers. So, folks, that's what I got for you today. 142 people watching. You are awesome. Thank you, thank you, thank you. Like, subscribe, say hello, say hi to Sunny and Happy. I want you to have a wonderful day. I get lucky enough to speak with Greg Dickerson, Rylas, and Taylor today. So I'm having a wonderful time. Hope you have a great day. Bye.